morning, it's Jonathan Barrett with this week's Market Buzz. Lots happening out there at the moment. In the US, Fed has it. Powell's contender favours weak monetary policy. So we can basically expect 3 more cuts into 2026. So if anything there, it's going to be favourable to the equity markets. At the moment, we've got about an 80 to 85% probability that the Fed delivers a rate cut in the next meeting next month. So stay tuned to that, although I think it's actually factored into equity markets. But on the month, S&P 500 was mostly flat, even with Thanksgiving rally. Retail sales in the US, a small increase in the 4 months, but well below forecast. So we're still actually seeing the economy starting to slow down, regardless of equity valuations continuing to trade higher. In China, industrial profits in China continue to climb for the 9th month in a row. This is quite positive, actually, when you look at it. All the policies which have been put in place to try and get that economy more robust are actually coming out to play. And to me, that's a positive thing. If China hit engine room, China starts to move, that'll drag up some of the other peripheral economies. In Australia, inflation, last week we had an inflation number, 3.8%, way higher than forecast. And the RBA is signalling more of a tightening bias, which sort of gives it a little bit unnerving in terms of equity markets. So we might see a little bit more of a correction there. We're moving back to a tightening bias, as I suggested, and that'll also put a bit of a spin on the Aussie US, which we like and have liked for some time. So expectations are there for that to continue. And I think if anything, the Aussie, if it breaks through these levels, 65.70, even 66.10, that's going to be a good trade. We think it'll certainly trade higher. Copper up to $5.10 a pound. It's the highest level in 4 months. We're going to talk about that, as well as silver and oil in the report. Copper extends the gains. We've got supply concerns there. Also on silver, huge move, up about 5% last Friday, breaking through record highs at 56 per ounce. That's on a supply crunch and extremely low inventories in China. Remember, silver is one that's used in the green economy, and we don't have that supply. On the back of that, gold rallies to a 1-month high and still looking quite positive. Okay, let's have a little bit more of a deeper dive now into the commodities, because I think at this stage we're seeing a good lift in some of your inputs like copper and silver, but oil is just not performing. And we've sort of had a little bit of a comparison here as to why, because we actually think that oil will have more of an upside coming forward than some of the other commodities. So we're taking a little bit more of a deeper dive into that and comparing the other 2 commodities. Okay, as we know, oil is a cornerstone for the global economic behaviour. And at the moment, there's quite a broad bearish consensus. And I think when you look at OPEC Plus, which are controlling supply, when you look at how people are actually looking at demand, when you look at expectations out of a resolution in the Ukraine, people are starting to think that's going to be a little bit more bearish. But I think on more of a contrary, I don't think that will be the case. I think that if you get that rebalancing, OPEC will control more. And as a result of that, I think you'll see prices gravitate higher. They have been in a range for some time. When you look at the technicals, which we will a little bit later, you can see that oil in itself is set for a move higher. So really positive on the oil market, and do expect it to continue to trade higher. We do need to see a break through this 66.10 and 65.70. And if we do get that, then I think you'll see a rally. All the technicals will start to come into flow. Let's see also what Mr. Putin does, and particularly about Trump's proposals. But at the end of the day, I actually feel that a resolution of all the macro issues that we have will support, and if it does support that growth, then you'll see this commodity will move quite significantly higher. Anyway, the OPEC Plus meeting on the weekend virtually said that they're going to be more disciplined into early 2026. Okay, copper. As we know, copper is viewed as a litmus test for the global economy, and it has that role in construction, manufacturing, and also that transition to electrification. I think as demand grows, we're going to see more and more demand for copper based on that electrification or the green economy. And I guess with that, we're seeing already a shortness in supply. Now, we've seen that move to $5.10 a pound. It's at a 4-month high. We are looking in 2026 for that tightening global supply to continue. And as a result of that, I think that you'll see prices move higher. There are still major concerns: the shutdown of Freeport, giant Grasberg operation in Indonesia. They supply about 3% of global supply. That to me is an issue. And we've also got some concerns there in Chile and Peru, which is pushing out our outlook in terms of that supply side. So supply side issues, growing economies, it's got to be supportive of the copper price. Finally, I guess when we look at silver. Now, silver has gone to record highs and it looks quite positive, still does. It is a market that's sort of trading significantly higher. We have got basically, once again, a supply crunch. China's silver exports hit all-time low around high over 660 tonnes in October, but there is no stock. So silver is used in the green economy, and I think with silver in that green economy, we're going to see continued demand. So I continue to like silver. Hasn't told us that there's a top in place, and I would think it would continue. Okay, on the week, obviously the US Fed's coming back into play. We're getting more numbers, which is good. I think the most important thing, industrial production, and also I think the Fed's going to release a little bit of news on the impact of the tariffs, something we all really want to see. But from the key indicators, we've got the ISM, PMI, Michigan consumer confidence, which we know has been quite bearish, ADP labour reports as well. So quite a bit of good data, and that'll be fun to see how the week unfolds. Okay, let's have a look at the technical side of it, and I'll just share my screen. We've got the Brent oil price. What I do like about Brent and where it's trading is the small fact that this is a beautiful breach and pullback. And I think if we get over this 65.10, then we'll see it up to that 70 area. So this is a good classic move. We've got beautiful triple bottom down here. All looks quite good for a move to the top side. Now, the market is bearish, but I don't think so. I think we can actually see it trade a lot higher from here. And when I think you look at it, you can see that the divergence on the daily. You can see that it'll turn around. And so that's why we like to be bullish oil. It's always darkest at the dawn. And for a lot of traders at the moment, it's a low risk buying opportunity. You can pick it up at these levels, and a break below 58.50 will be wrong. But at the moment, I'm sort of gating for that to continue to trade higher. Okay, let's have a look at the silver market. Silver continues just to rocket ahead, as we know. That's the gold market. Let's go back on the silver, sorry. Silver, we've broken through new highs. Now that normally indicates that the market's quite strong. Little pullback to that 53, still quite bullish, but we certainly still like it. And if we look at the gold price as well, not yet record high, but it's certainly feeling that way. So I think if anything, remain long in the gold sector. Having a look at the S&P, there, I'll just move both those. S&P looks like it's trading to those highs we've seen. We've got to get that catalyst. The market's factored in those interest rates, so if we get any negative news, the market will come back. We are still short on those. Remember, it is a hedge though against our long positions, our long equity positions. Don't be surprised if we don't test back to the highs and then correct from those levels. So there, local market, ASX 200. As we can see, the movement on interest rates seen a little bit of sideways to downward price action. I think we are at a bit of a low around this 8,500. Might see a little bit of upwards price momentum. But yeah, definitely a little bit of a correction here. Sideways price action this week, and it might trade up a little bit. But I do think it's concerned, particularly with the RBA saying interest rates going up, that I think we have seen 9,000 for the last time for some time. Right, okay, well that's pretty much about it for this week. So that's it for this week. It's a lot happening, and we'll certainly talk to you next week. But happy trading, and we'll chat you later. Bye for now.